Welcome back. Now, SARS is introducing an advanced pricing agreement regime this year, a major shift in how multinational companies are taxed in South Africa. Now, the reform aims to bring tax certainty and predictability for multinationals doing business in the country. The move has been welcomed by industry experts, and joining us for more insights is Deputy CEO of the South African Institute of Taxation, Keitumetse Sesana. Keitumetse, thanks so much for your time today. And I guess let's start at a basic level, right? What are advanced pricing agreements, and why does South Africa's move into an APA regime matter now?
Thank you very much for the question and for having me today. So an advanced pricing agreement is a forward-looking agreement between a taxpayer, which is usually an M&E that operates in multiple jurisdictions, that this M&E enters into with one or more tax authorities in order to predetermine the transfer pricing methodology, the specific related party cross-border transactions that are subject to audit or that will become under the lens for a fixed period of time, and the exact price that they put in place. Now, the OECD has prescribed a number of methodologies that one can determine whether or not a transaction is at arm's length. So, for example, a transaction between myself and a third party is usually at arm's length. But when I enter into a transaction with a related party or sort of like a family member or relative, then prices tend to be skewed and people then strip from the tax fiscus of that specific country within which they are operating. So transfer pricing seeks to level the playing field in order to make sure that pricing is indeed adjusted or is according to what would have been entered into an open market. Now, these pricing agreements just stipulate that multinationals do not hop into different countries and skew the prices and therefore strip the basis of that specific country of the taxes that are due, and they enter into these agreements with the competent authorities to ensure that the prices are then fixed. Just one additional point to add here is that because tax is such a volatile space, you never know what one country will do vis-a-vis another country, and that upsets trade and investor confidence, and also your ability to engage in a business where you actually would prefer certainty. So an advanced pricing agreement, an APA, assists to set out certainty so that a multinational entity will know when they transact with this specific tax authority what the tax landscape is going to be. They can then adjust accordingly, and there's no surprises that will come in during that fixed period of time.
It does sound like the APA's regime genuinely improve certainty and reduce, I guess, some sort of discomfort among these multinationals. I'd like to know if APAs replace any existing transfer pricing enforcements, or do they sit alongside current SARS tools? Basically, how did SARS move before, trying to enforce the APAs?
So this will sit alongside what is currently happening. So the transfer pricing space, just at a very, just a lay way of putting it, you'd enter into a transaction. Certain transactions above a threshold have to be reported in a local file by the local entity. The ultimate parent entity in the foreign jurisdiction or where the company is held or the decisions are made out of would have to then submit a master file for all of its subsidiaries around the world and for all the related party transactions above a certain threshold. There's also, if transactions are below a certain threshold, that you need to also have like country by country reporting. So there's visibility of what's happening in the M&E. So that is not going to be replaced. This just acts alongside it to ensure that there is that enhanced certainty in order to ensure that those tools that are currently in place are just supplemented by the APA program to ensure that transfer pricing is indeed something that doesn't happen and that the prices are not skewed, and what is due to South Africa is due to South Africa, but also making it equally easier for people to engage or to transact in South Africa because there is that certainty.
So transparency as well, transparency really being key. Yeah. Now, one of the reasons APAs were delayed in the country was limited transfer pricing expertise, right? How critical is SARS's specialist capacity to the success of this program?
It is very critical. If you look at countries like India and even in the African continent, there are some countries that are moving. You look at your Kenyas, your Moroccos, who are also moving in the APA space. They are capacitated by a number of individuals who specialize in this niche field of transfer pricing. I must make mention of the fact that transfer pricing is a very specialized field. It is a field that constantly changes because trade is constantly changing. And you're
Yes,
looking at,
yes.
affecting prices not only in South Africa, but your related party might be sitting, for example, in the UK. But then you have another party that sits on Africa, and competent authorities, because of their sovereignty, obviously want to get the pie or the biggest share of the pie. So it's a very nuanced space. And South Africa, for a number of years now, if you remember that the draft legislation for this was actually issued in 2023, so this has been quite some time that there hasn't been movement. But at our recent tax indaba in 2025, the head of operations and segments at LBI, Mr. Charles Makula, did mention that they are moving to capacitate SARS. And you'd remember that
Yeah,
after 4 months
yeah.
or so after that, they then had those specific positions that the business day also has alluded to in the article this morning. So capacity and skill set is what we view has been the delay in getting the APA program running, but we are pleased that SARS has reached out directly to those people who are involved in the transfer pricing space, and the expertise are there. We are confident that the people that are filling these positions know what's happening in transfer pricing, both from an advisory perspective, from a taxpayer perspective, and ultimately would be able to coexist along with these bilateral competent authorities to bring about the success of this program.
And Keitumetse, before I let you go, we do know that the SARS Commissioner, Edward Kieswetter, is set to step down this year. Perhaps you can shed light on the significance of his role in rebuilding SARS and how important continuity is as reforms like APAs are rolled out.
So the commissioner has, achieved great strides. You remember that when he took over the Revenue Authority in about 2019, the state of SARS was not that which we see it as being at today. He has initiated many objectives and many initiatives, such as the APA under his leadership. There's the formation of the Large Business Forum, where companies have come together. He's launched expedited debt compromise initiatives as well. So there's been a plethora of things that the commissioner has done, and that's just but a few that have made tax easy. But equally so, he's also taken, a hard stance against taxpayers who are non-compliant. After reaching out olive branches, he has repeatedly stated, in a plethora of cases that we've seen go all the way up to the Constitutional Court, if might be, that he would make people who evade taxes, non-compliance hard and costly for taxpayers that don't want to do it that way. And we've seen that he has achieved those strides. So it's been very important, and we would like to congratulate him from our capacity as the state in all the work that he has done. But obviously, his successor is going to have to carry on this momentum, because, you're only as good as your last act. And the commissioner has definitely laid a solid foundation and acting upon these. And I have full confidence in the team at SARS and whoever is going to be taking over, as we have worked with them over the years, that they will definitely bring this forward. And the progress that they've made with the APA is just one of those signals, and obviously taxpayers are very, very pleased. It signals that South Africa is strong in its governance and that the doors are indeed open for business.
All right, let's leave it there. Keitumetse, thank you so much for your time and sharing your fantastic insights with us today. That was Keitumetse Sesana, Deputy CEO of the South African Institute of Taxation.